Good morning, traders. It's the 6th of April. We are Signal Centre Talking Bull. I'm Joe, joined by Steve. How you doing, Steve?
Yeah, very good, thank you.
We made it to the end of another week.
Yeah. Got to duck out of Friday and duck out of Monday, and yeah, got a nice long weekend ahead of us.
Indeed. Going to be very welcome for sure. Okay, let's wrap this one up then. Hope it's been a good one for everybody watching. As always, if you've got any requests for certain markets, please feel free to post them up and we will do our best to cover as many as possible. As usual, we'll go through the latest headlines, have a look at what's been moving markets over the last 24 hours and what we can expect from the day ahead. So, first up, weaker ADP jobs growth yesterday. The US ADP data recorded an increase in private US payrolls to 145,000 for March and below the expectations of around 200,000. Although the February increase was revised higher to 261,000 from the original reading of 245. There were notable declines in payrolls in manufacturing with sharp reductions in financial activities and business services. Regionally, there were sharp losses in the south. We also saw slower services growth. The US ISM non-manufacturing index declined sharply to 51.2 from 55.1 the previous month and well below the expectations of 54.4. The slowdown in the rate of business activity growth and a much sharper slowdown in new orders while order backlogs declined. There was also a slowdown in prices growth with the lowest reading since July 2020, which suggested an underlying easing of inflationary pressures. The dollar demonstrated some resilience yesterday. As a result of these data releases, yields dipped lower again. The currency did show some resilience later in the session and edged back from a fresh 2-month low. On the flip side of that, we did see some firm data in China. The Chinese Caixin PMI Services Index posted a strong gain to 57.8 for March from a previous reading of 55 and above the expectations of 54.8. We've got Canadian employment data due today. The consensus forecasts are for an employment increase of around 10,000, with the unemployment rate edging higher to 5.1% from 5%. And tomorrow we've got US non-farm payrolls. The latest release comes tomorrow, although it's a bank holiday in most of Europe. Consensus forecasts are for an increase in non-farm payrolls of around 235,000 from 311,000 previously, with the unemployment rate holding at 3.6%. The market reaction will be complicated by the fact that the European markets will be closed for a holiday. So, Steve, let's get into some charts, have a look at how things are shaping up today. Let's start off with cryptocurrencies and then move on to some commodities.
Yeah, of course. Right, let's take a look at Bitcoin. Just coming to the end of the week, and we can see, well, coming to the end of the week for us, I suppose, Joe, but not maybe so much for cryptocurrency. Although over the last few weeks, we haven't really had a lot of things to talk about. It's been quite rangy. Opens and closes on the weekly chart have been the same, and we're still sitting at that level around about the 28,000 area. That's where we're trading at the moment. Take a look at the daily chart, and we can see that price action yesterday was again indecisive, forming the doji chart, doji candle. We've got this like 9-bar moving average here that we're just like obviously quite close to, because we haven't been trending at all, and we sort of like been stuck in this range for a couple of weeks now. So really looking for a bit of a breakout. Obviously we've got this big band of resistance above, all the way up to 32,500. Really expected that to be tested at some point, and there hasn't been much of a test. So it does feel like there's a few sellers up here capping the gains to the upside. Levels to watch, I suppose, over on the short-term chart, we've got the 29,365 and below resistance and support below coming in at 26,500. So they're the two main levels to watch as we bob along, sitting quite nicely. Elliott Wave saying we're in an ABC correction, looking for that C leg downwards, and yeah, but nothing really sort of like to get us excited about at the moment. Ethereum in a fifth and final leg of an Elliott Wave up move. We managed to get up to 1942 and pull back overnight down back to 1891 bearish engulfing or bearish outside candle formed between 1 o'clock and the 5 o'clock time frame yesterday. Looking for an ABC correction, looking for the A leg to sort of like really kick on. We've got support coming in, obviously down at 1730 level. That's one of the potential targets, a 38.2% fib retracement there. And below there, we've got a little bit more support down to 1690. On XRP, from an elite wave perspective, this is a fourth wave correction, looking for that fifth leg extension. And we have pulled back from the 58.5 cent level, pulled all the way back, got down to 48, and have held just above there, really looking for that extension higher. Yeah, potentially could come. Although this smaller wave, we can see it has formed that ABC correction already. So the larger wave, the larger time frame, looking for the extension higher. And Doge, which we were asked to look at the start of the week, that topped out around that 10 cent level and has pulled back from there quite aggressively, trading at 921.5. Let's move on to commodities. Take a look at what gold has been doing. It's extended higher. The high we got up to was 2032, and then we formed quite a bearish candle on the 4-hour chart. Let's start with the daily. Remember, broken out of the triangle formation to the upside. Yesterday's candle overall was indecisive, so looks for a potential reaction lower today. And we've got off to that sort of start. So are we forming an evening doji star formation? Potentially. The levels to watch on the short-term chart, on the 4-hour chart, is obviously the 2032, the high. And then we've got the big all-time high at 2075 above that. And down below, we've got 2008, which, remember, on the way up, 2009 was, well, nearly 2010 was the failure, swing high failure, and we reversed sharply back from there. So that has acted as a bit of support initially. So definitely a level to watch as we trade into the day. Breaking back down below there could open up a move down towards initially the 2000 level, then 1990 was another previous resistance, which we should form some support. The Ichimoku cloud not coming in until about 1970. Take a look at crude oil now. We've maintained these higher levels, so this will be an interesting week. If we maintain these highs on the week, we'll have formed this breakaway gap, which is quite significant, and the gap basically sits between the $79 level and just below the $76 level. So nice bit of price action this week, just gone sideways, but maintained those break higher levels. On the Brent crude, exactly same sort of price action. Brent crude is trading at a $4.30 premium, so that premium is moving slightly narrower overall, but same sort of price action. We've seen this. It almost looks a bit like a I don't know what we could call this. I was going to say a diamond formation, but maybe not quite. If we got a little bit of a lower spike down around on the 4-hour chart around about midday Tuesday, then that would have played out quite nicely, a bit of a diamond formation. But we have got that break between the $80 level and the 83.50 level, so $3.50 gap there, and that would run straight into that cloud support as well if we did manage to break back down. But at the moment, it's not really showing signs. It's showing signs of slowing, but no obvious sign of reversal yet. So yeah, natural gas just bumped off the lows a little bit. That low we got down to that around about the 208 area and broke nicely higher, and we are trading up at the resistance level. 226 is the area of resistance. If we manage to break above there, then we would have formed this nice double bottom formation, and with a potential for a little bit of a relief rally higher, because it has been under a lot of pressure. So 208, the main area to watch on the downside. Break below there should open up quite nicely once the $2 level is overcome. and above 226 the resistance, and hopefully some blue skies above there for the natural gas. Let's take a look at FX, Joe, and we'll dive down. I'll jump into indices after that.
Lovely, thanks, Steve. So dollar index, as mentioned in the headlines, there was a bit of a bounce yesterday. It wasn't enough to engulf the previous day's losses that we posted. We can see here we had this 78.6% fib level in blue from this short-term move here. So we saw initially that held as support, then we saw the break through it, and now that appears to be acting as a bit of resistance as well. So this previous low from the 23rd of March is capping gains this morning. We've had a little bit of an attempt to move higher, but that is stalling. So clearly the short-term trend still remains bearish. We do have some major support below at 101.29 down to 182. If we look over to the left hand side, we can see why this was a previous low here, and this was the previous low from when we posted on the 3rd of February. So it looks as though prices are set to remain on the bearish side of things for now, unless we can get any kind of evidence of some reversal patterns, whether that be a multi-candle reversal or just looking for a big bullish outside candle or a bullish hammer to indicate that maybe the buyers are stepping back in and feeling comfortable enough to try and push this higher. So lacking any signals on that front for the time being, so therefore we can expect prices to continue within the dominant trend. Taking a look at euro US dollar, again posted some weakness yesterday as a result of that strength that we saw on the dollar index. We are into a couple of fib levels here from both the longer term and the shorter term, and prices seem to be stalling a touch. Ultimately, the trend in the short term and the long term remains quite positive. Therefore, a push higher towards these previous highs we posted on the 2nd of February cannot be ruled out. And it's looking pretty strong at the moment. Let's take a look at cable. So we saw a decent break to the upside here, taking out these previous highs at 124.30. And prices are holding that level now. So we did see a bit of weakness yesterday, but that newly formed support did a job of holding. So we've highlighted this level above at 126.66, which is the previous swing highs from back in May last year. So it looks as though we're on course to go and test those levels in the short term. Clearly, there's a bit of upside impetus in the very short term following the break of this wedge. So looking pretty strong indeed. Let's take a look at dollar yen, see what's happening there. So prices kind of bumbling along, not really going anywhere at the moment, holding some support around 130.57. So these two are just kind of duking it out really for what is the weakest currency at the minute. And it doesn't appear to be going anywhere fast. Dollar Swiss was quite an interesting one yesterday because it broke down through a major support level. So we've got this blue line here at 90.85, which if we scroll to the left, we can see there's multiple touch points along here going all the way back to November 2021. And also the previous low that we posted on the 2nd of February. So we breached that level yesterday, but fought back quite strongly to post a bullish hammer candle. So potentially a short-term bottom there on dollar Swiss, which traders and investors can maybe take a look at. You know, clearly we're at a very important support level here. So if this continues to hold, then there may be some scope for a bit of a corrective bounce in the very short term. But overall, the trend is bearish, so it is highly speculative and it's a counter trend trade. Let's take a look at the commodities currencies quickly. Aussie. This continues to try and grind higher at the moment, maybe forming some sort of wedge formation in the short term. So be aware that we could get a break of that at some point. A break to the downside would indicate that we're going to get further weakness in the short term, possibly towards this support area that we've got highlighted here between 65.20 to 65.47. A break to the upside, and maybe we can go on to challenge these previous highs. So pretty mixed on that front for the time being. A couple of requests. We're going to look at sterling yen and also going to take a look at New Zealand dollar yen. So let's take a look at some of the other currencies linked to that as well in a moment. Start off with sterling yen. So we can see here the daily. We have seen a break through the downtrend resistance, which can't be said for some of the other currencies at the moment. So that indicates that there's actually a bit of underlying strength in sterling at the moment. We pushed higher through this downtrend here on the 29th of March, and the rally took us all the way up to this previous swing high that was posted on the 28th of February before posting this nasty looking shooting star candle. So that is a pretty powerful reversal that we've got there. And the fact that we backed that up with further losses yesterday indicates that we may see a little bit of short-term weakness. Now, Moch, who's watching on YouTube, has gone long this morning, and based on the break of the downtrend, that's probably not terrible. But I would be aware that there may be some resistance at the low of this candle that was posted on the 4th of April. That comes in today at 64.19. So taking a look at the intradays here, we can see on the hourly, it looks as though we've completed 5 waves higher and actually completed a 3-wave correction as well. Decent-ish move higher today, but I would maybe be a little bit concerned about the potential for this. It is speculative because we haven't completed the pattern, but maybe we're in the process of forming maybe some sort of right shoulder here, and maybe gains could be limited in the very short term. So do be aware of that. In the short term, if you are going to continue to run this to the long side, which I don't see there being any major problem with, given that we've got that break and the confirmation on the daily, then where would I be looking for here? I'd probably look at some fib levels from these recent highs to the lows. 61.8 comes in at 65.01, so a move into a big round number there could be a potential exit on that. Also, if we take a look, we've got a 50% fib at 164.58. So a little bit mixed for me on that at the moment. But if it's working, then maybe just continue to move your stops up and try and protect your profits along the way. New Zealand dollar, US dollar, let's take a look here. So this is another pair that's been kind of trapped by the downtrend. We've seen this also with euro yen. If we look at the daily price action here since the 28th of December, we can see prices have been very range bound. So moves to the upper end of this range have provided opportunities to sell. Moves to the lower end of the range have provided opportunities to buy. So at the moment, we're kind of sitting in the middle of that, and it appears as though that downtrend is still preventing prices from moving to the upside. If we take a look at the intradays, just to see if there's anything shaping up here, I've got a few drawings that are no longer relevant. So again, completed 5 waves higher, in the process of completing a 3-wave correction lower. Arguably, we've already done the C leg here as prices have moved higher over the past hour. Are they going to continue to move to the upside? I'm not entirely sure. Given that we've got these pressures of the downtrend on the daily chart, I'm not sure how much upside we'll have. We might go and challenge the previous highs that we posted on Wednesday up at 83.87. But looking at this from a range perspective, we're kind of trapped in the middle of this at the moment. So not really too sure about what to say on that just yet. Euro yen's another interesting one to look at because we've seen at the downtrend here, we've seen multiple attempts at trying to break through. On each occasion, it's failed of late. We posted another reversal on the Tuesday this week, on the 4th of April. Trying to rally back a bit at the moment. I would say it's probably going to be resistance around 143.96. So potentially I'd be looking to sell into that kind of region, looking for lower prices in the short term in line with this downtrend. Is there any other requests that have come up, Steve?
No,
Doesn't look like
see
it.
any, no.
Okay, so I'll leave it there for currencies and we can take a look at some of the indices.
Okay, lovely. Let's just take a look at FTSE to start with. Lovely. And look at the daily chart initially. And we can see price action has remained quite buoyant, really. We had this Tuesday's price action, the turnaround Tuesday, which engulfed price action, almost completely engulfed the Monday's price action, and at the same time posted a high up at 77.27, which is the highest level we've seen since the 13th of March. However, Wednesday and Thursday's price action so far has been pretty constructive. We got down to 76, around about 76.27 area, and bounced from there. So quite a nice reaction higher from there. So it looks quite positive going into today and into the end of the week. Yeah, they're the levels to watch in FTSE. On the DAX side of things, we posted a new high, a new sort of yearly high. We've rejected that level, that's 15,739, posted a shooting star candle, and then broke down lower. This morning, we've been a little bit more positive, but we'll really be watching that support level coming in at yesterday's low, 15,629. A break below there, should open up further downside. Next support around about the 15,300 level, which was the swing high from the 22nd of March. On the Dow, similar sort of price action to the DAX. We had this sort of hanging man type candle after breaking the resistance area from the swing highs on the 6th, 7th of March, where we got up to 33,453. Managed to actually top out at just below the 33,700 level and react lower. And we've sort of really haven't done a lot since then. We had a bit of a spike down, support really coming in on from Monday's low at 33,254. Break down below there hopefully opens up the downside if you're short. If not, then this extension higher could eventually look to test them heady heights of the 34,400 area. Nasdaq has really been negative overall this week. The hanging man candle from Monday was we had a bit of follow through to the downside on Wednesday. Tuesday didn't really do anything, but yesterday's price action was pretty negative, and we stalled around about previous resistance 12,900, and we're trading just above there now. So again, potential for a break to the downside after what looks like a bit of a top in place. And S&P probably has been the more technical one this week. We had this bullish channel drawn on a parallel bullish channel where we connected the bottom points. We added to the high from the 22nd of March, and now we've got 3 touch points on that channel, which is pretty decent. And that bearish outside candle from Tuesday saw us break down again yesterday. We actually got down to 4,073. This was my gun to head trade I did yesterday. We didn't get any lower, so it ended up being a little bit of a positive. I was looking for a big old move to the downside, a big old break, but didn't really transpire, and we're sitting doing nothing at the moment. So maybe potentially sticking with that trade for gun to head, but we'll see. By the time we get there, I might have changed my mind.
Okay, well, thank you very much for that roundup, Steve. Let's get to the gun to the head challenge then, shall we? So just a quick reminder, Steve and I both pick trades on the stream, must have risk reward ratios better than 2 to 1. And we've got stops and targets, of course, on all of these ideas. Trades are closed at 9 p.m. UK time unless the stops or the targets are reached. And we are trading this with a live account and risking 1% of capital each on a per trade basis. So yesterday we can have a quick recap of the trades that we posted. I was looking for Euro New Zealand dollar to break down from this range that had established on the hourly chart. Bit of a stinker really. My stop loss was well too tight, and if we click the play button we can see it actually rallied quite substantially before actually dipping back, but I got flushed out of that very early on, so apologies if anybody followed that. That was a bit of a stinker, but Steve's the man on form at the moment, and if we take a look at his trade idea from yesterday, we can see he was looking for a reversal in the S&P 500, and at 9 o'clock he was nicely on side. So we click the play button there. We can see only minimal levels of drawdown for Steve before it went lower. Didn't quite get to the best levels of the day, but he was still half an hour on side. So well done to you, Steve. Your hot streak continues. Everybody's hanging on your every word now. So can you give them the crowds? Can you give the crowds a winner to finish?
I'll give the crowds a wave. I'll give them a wave. That's about as much as I think I'll give them. No promises here. The 2 trades I'm really sort of like drawn between are obviously gold. Are we seeing a little bit of that after yesterday's doji candle? Maybe we've topped out, but I don't want to really go against the grain. My overall view on gold remains bullish, dip buying. So why would I take the risk of challenging that resolve? If anything, you could actually look to that's where dollars index. Dollar index is even breaking lower. It's trading at that 101.80. So if anything, really, I might sort of like hang my hat on gold one more time as we go into the week. End of the sort of like at the end of our week. I'm sorry to rub it in, everyone, but I'm looking more like something around these levels, having the stop quite close, just below that 208 level, and maybe targeting a move back up to those the high area where we got to 2032. That could be a potential for a trade idea. Let's see if we can get it on. Create new order, buy, market, take profit, stop. Let's make sure we got 1% in there. Not quite 1%, is it? Closer. If I really am tight with a stop, then maybe we can get, yeah, we can get 2 to 1 out of this. Risking £18.63. So there's my stop just below that swing low that we got on the 3 o'clock candle this morning. Looking for it to push back up to those resistance levels. So going for gold again.
This one, Steve. I'm going to take a look at indices today, and it looks as though we could be ready to finish the week off on quite a positive foot, certainly in Europe. Euro Stoxx 50 has been on a decent run higher of late, as we can see here. If we look at price action over the last few hours, it looks as though we are breaking out of a wedge pattern, so suggesting a continuation higher in price. Also, if we take a look at the Elliott wave count, we can see that according to these charts, and this automated pattern service, that we're in the kind of the fifth wave as it stands at the moment. So from these lows, we've got 5 waves potentially forming. We're breaking out of this wedge. The fifth waves are all the way up here, so suggesting that there could be an almighty breakout at some point. Looking at it on the daily chart, my major concern is that we are into a big area of resistance here and failed to break that down on the first attempt. So by buying here and targeting a move to those recent highs, and maybe even looking for a slightly newer high, just in order to improve my risk reward, I would like to buy Euro Stoxx at the current level if possible. Steve, I've got 43.06 here. It might be a bit different on the Owanda price.
Yeah, it's slightly different. It's about 7-cent premium, although
Did
it's
this
not
the other
really...
day, didn't I? Let's we don't do a crypto. Let's have a look at the Owanda price, see how that's shaping up. Get rid of that. Let's get the same drawing on, looking at that break of a wedge. And we can look to buy it here with a stop loss at 42.91.
Right.
And a target, let's go for a 2 to 1 here. 43.60 might as well go 43.65 just because of the spreads to make that risk reward viable.
43.65, did you say?
Yeah.
Okay, looks like we're getting it on. We managed to buy one there, Joe.
Okay.
So there we go.
Perfect. Let's see how that goes. See if we can get a nice rally in equities to finish the European week. Okay, 2 trades on there. So Steve going for gold. I'm going for Euro Stoxx. Let's see how they play out. In terms of data today, there are a couple of bits to be aware of. So we've got the US jobless claims at 1:30. At the same time, we've got the Canadian employment report as well. So their version of kind of the monthly employment number. And then we've got US non-farm payrolls tomorrow. So could be a pretty choppy one ahead of that. And certainly over it, and even with lower volumes as well on Friday due to no participation or lack of participation from the European markets, it could be pretty choppy indeed. So do be careful if you are sticking around in front of the screens tomorrow to trade through that one. Next week, we've got inflation data in the US, as well as a couple of policy decisions from the Bank of Canada and some, well, not a policy decision, but minutes from the Federal Reserve next week as well. Okay, Steve, let's wrap it up for the week, shall we?
Yeah, lovely.
Great.
Enjoy yourselves, guys. Take it easy, and
Yes.
we'll see you Tuesday.
Don't eat too many Easter eggs, guys. Thanks for watching. We'll see you next week.
Cheers.